But speaking of the cloud AI industrial complex, I have another story on how Wall Street specifically is preparing to cash in on the AI boom. I find this angle fascinating because over the last 30 or 40 years, Wall Street has sort of been divorced from the tech boom in a way. Sure, when companies are preparing to go public and then do become public companies, big banks are there to help them do that and help them become big public going concerns. But for most of the founding and growth stage, it's VC money that does most of the financing and reaps most of the rewards. What this AI boom seems to be suggesting is that big banks can get in on the action in a big and mostly new way. Quoting Bloomberg, "While much of the speculative hype around AI has played out in the stock market so far and seen in chipmaker Nvidia's share price, the giddiness is spreading to the sober suits of debt finance and private equity. Analysis by Bloomberg News estimates at least $1 trillion of spending is needed for the data centers, electricity suppliers, and communications networks that will power the attempt to deliver on AI's promise to transform everything from medicine to customer service. Others reckon the total cost could be double that. Even Wall Street skeptics on AI's ultimate money-making potential, such as Goldman Sachs head of equity research Jim Covello, have said it's worth staying invested in those who provide the plumbing. The wealth of Silicon Valley's and Seattle's tech giants, who want some of this capacity anyway for cloud storage and the like, offers a degree of comfort. Banks are racing to keep up with the burst of activity. JP Morgan Chase has set up a dedicated infrastructure team to corral its troops, according to a person with knowledge of the matter, as has Deutsche Bank and others. One rival banker admits his firm is juggling so many data center deals that it doesn't have enough staff to cope with the workload. BlackRock's boss, Larry Fink, told Bloomberg TV his firm will raise as much as $120 billion in debt linked to data centers after teaming up with Microsoft to bankroll the development of the buildings and energy infrastructure. Bankers and private lenders will be desperate for a slice of such deals. Nevertheless, even amid the AI delirium, there are notes of caution. Some point out that while private equity firms have a solid pedigree in real estate, they haven't done construction work at the epic scale and expense of some of these data centers, known as AI factories, in the lingo of Nvidia's founder and chief executive officer Jensen Huang. Innovation is constantly upending technology, adding jeopardy to long-term capital projects. And AI's acolytes still haven't dreamed up a killer app to match the widely successful e-commerce and GPS location-based upstarts of the Web 2.0 era. Even if they do, the tech industry's brightest minds are working to make the software and hardware more efficient to lessen the need for scale and power. There's a lot of reason for optimism, said Barclays' Benjamin Fernandez, head of the bank's esoterics ABS business, which works on bonds backed by non-traditional assets such as data centers. But if for whatever reason it doesn't take hold and people don't find a way to monetize this investment in AI, that could potentially pose risks, end quote. Nothing more for you today. Talk to you tomorrow.